Okay guys, this is Brandon from 13 Market Moves, and today I'm going to be talking to you about Palo Alto Networks, PANW, and it is an earnings play for November 16th, 2020, and these guys are going to be reporting earnings Monday before the market opens. So one of the things that I want to talk about is the behavior of Cyberark, CYBR, which reported earnings on November 10th, 2020. And what does that say about Palo Alto Networks, PANW earnings, which reports again earnings on pre-market November 16th, 2020. And so let's get on with the plays here. Palo Alto Networks has been a high flyer. They've done very, very well. Everything right now, chart-wise, as you'll see, looks bullish. And when looking at the earnings plays on August 24th, Q4 2020, they reported decent earnings, right? They reported $1.48. They were expecting $1.39. And so it's a steady performer. They beat on revenues, beat on everything else, and they guided relatively higher. And then, so every earnings quarter you see, they report decent earnings. Very rarely do they miss. They missed once in September 4th, 2019, they're expecting 27, and then they reported 19 cents. And then on the revenue side, they're, pretty much, they beat slightly. But overall, generally, you'll see that in 2019, they were not doing very well in terms of their earnings per share. And since then, they've kind of cleaned up their act, and they've been beating a lot of their forecasts, okay? And they beat on revenues here on May 29th. One of the things that are important is that from my review, it doesn't really matter if they guide in line, guide up, or anything else. And they have a peculiar way of moving after earnings. So let's kind of look at that and understand that they're probably going to beat their earnings, and they're probably even going to basically have a earnings guidance that's going to be higher for the next quarter. The question is, how does this stock behave relative to other peers in the group and in this current bullish market environment? Okay, so let's move on. So one of the things that we, again, want to look at is, here's the Q4, August 24, 2020. They beat on both earnings and revenues, but guided in line. And then what happened? So they report earnings pre-market. So basically, they're going to basically pop and drop, and then proceeded to go downwards significantly. But on that day, they dropped about 3.9%. And we're going to show you why sometimes it's going to be better for you, especially when it doesn't pop and drop like this, okay, to maybe look at the following day or at the market close to initiate your short positions. But regardless, here's Q3, May 21st, 2020, beat earnings, and they guided higher. And guess what happened? They opened and then popped a little bit and dropped, okay? And this is why I'm saying day one post-earnings might be a better entry. You certainly can take this 4.2%, but it's very important that you get out at the end of the day. For those of you that want more confirmation in this bullish environment, and because this chart, actually, when I go over the technicals, it's going to look fairly bullish here. It would be better to initiate short position on day one after the earnings, okay? But this is what they did. They kind of pop and drop, and then the next day it pops up. It looks like they're going to go to the moon, and then it basically falls back down and then continues on that pattern for a couple of days. Same thing here. Well, this is a little bit of an aberration because this is right before the crash or during the crash. They reported good earnings. They beat earnings and guided higher, and they popped, and then they dropped, and then they finished at highs of the day, only to find the next day, if you would have just basically shorted at the end of the day here, we would have caught all of this down, okay? Let's look at Q1, which is what we're going to be looking at, right? We're going to be looking at Q1 here. And so what's going to happen here? This chart looks super bullish, but we'll go over that in a bit. But what happened? They reported good earnings. They guided higher, and they popped, right? So if you got in at the end of the day, you would have caught this movement, or if you were just kind of scared and you didn't know this was going to happen, who knew this big gap was going to happen after good earnings, after popping like that, you could also have entered first thing in the morning and then caught a pretty decent range, somewhere between 13 to 15 point range in about 2 days. Okay, so now that we got that macro daily chart earnings behavior out of the way, let's look at some of the Cyberark. What's going on? Why am I comparing this to Cyberark? Well, Cyberark is a similar competitor in the industry, and they are a high flyer, and they reported earnings already on November 10th, 2020, and they basically reported decent earnings. They missed on their revenue slightly, but they guided higher, and their earnings per share was up. What's happened is they also reported earnings pre-market. And what happened was they opened and then they ran up and tested to pretty much to the lows, near the lows of the previous days previous days lows of the day, and then stalled out. And so that was the point to get in. And they basically sold off. So it went from 105 all the way to 95. That's a cool 10-point move, right? That's pretty cool. But you needed to have gotten out of here because last week, as you know, market kind of grinded higher. We think that this is going to happen on Palo Alto Network, but it has a precedent. It may be better for you to initiate short positions at the end of the day, or if you're going to play the intraday pop, get out quickly and then look to get in on day one post earnings. But is this going to repeat itself? Is this type of earnings and chart behavior pattern going to repeat itself on Palo Alto Network? So I'm looking at daily and weekly charts. Here's daily. And here's weekly, okay? So just so that we don't confuse everybody. Let's do daily here. And then here's the weekly, okay? Now, there is a sort of a double top. I fully expect probably on Monday that we're going to pop a little bit, okay? And it may even get up all the way up and retest this breakdown lows maybe out here. If it's super bullish, it may even get up to here. But that's where we're going to look for an avenue for it to short. But this is a bullish chart. Now, if this sort of a double top pattern holds, then we're going to get a nice shorting opportunity. And in a lot of cases, it is time to short when everything looks the most bullish. But, you know, I'm not going to lie to you. This chart looks fairly bullish right now. But the charts generally look pretty bullish. Cyberark looked pretty bullish until after they reported earnings. And so, you know, we have the MACD that's pretty trending, although it's just basically barely crossed over the zero level. So, you know, we may see one of these kind of a death hook forming here. But when we look at the commodity channel index, maybe it pops a little bit higher and then it comes down. But right now we're in the overbought territory. This is the daily. Let's look at the weekly. Weekly is no different. It basically, right now, it's testing the lower bounds of that Bollinger Band here. And it's ready to make a bullish MACD cross here. And we think that this commodity channel index will probably peak just slightly over and then come back down, okay? But regardless, how far can this thing go? I think this is probably the maximum, like 269, 270 area is where we think it'll pop. And if it stalls out, that would be a great entry. Now, so let me make my case about why I think it would be better for us to wait until towards the end of the day or the next day and short the pop at that moment. So let's look at some of these November Q1 2019 examples. So they reported earnings here pre-market, okay, fairly bullish. I mean, it's bullish price action. So in this case, if you would have shorted at the end of the day, towards the top, and you would have been rewarded because the next day, despite really good earnings, it gapped down and gapped down and moved down for the next 2 days. So that's the reason why I'm saying, you know, it might be better for us to wait until the end of the day to initiate our short position because it was running bullish all day long after the earnings release. Okay, so let's look at 2018 for Q1. So in Q1 in 2018, basically what we had is they released earnings pre-market. Okay, in 2018, it was another earnings beat. They guided higher, you know. So what you wanted to do, this one had a chance. If you short the top right here, you would have had a pretty decent range, almost 8 to 9 points here. But it might have been better for you to have waited until the next day And then because what happened? The next day what happened was they gapped higher, went higher, and then stalled out, and then all of a sudden just sold off like crazy. So that's kind of the reason why I think that it's better for us to maybe wait for day one, post earnings, to initiate our short positions. Or you could do both. You can trade the ranges here, and then if it pops, just stair step in. Just remember though, I think predominantly I'm more in favor of day one post earnings and being patient and watching it, because again, the chart looks bullish, and if they report decent earnings, it's going to pop, but it has a history on good earnings of popping the next day after earnings and then stalling out and then selling off aggressively. I like that bet better. Now, let's look at 2017 then. So what happened on 2017? Well, the earnings were good. It basically popped. Okay, so you had from 145 almost to 142, like a 3 to 4 point move down. I mean, not much. But if you would have held that short position, the next day it gapped up. Okay? And then it ran like it was going to the moon. Again, this is day one. This is why I think it would be better, based on the chart action right now, to let it bounce, okay, and then wait until the next day and let it bounce even higher and then short it. So this one was you short the morning and then get out at the end of the day, and you would have made a cool 8 to 9 points at that time in 2017 because prices were much shorter. Look at this range, really, really decent. Here's basically the bottom line. I think this is a little bit trickier to play. The market's been bullish. I'm not going to lie, it's been fairly bullish, but it is hitting the upper channel of the move right now. And, you know, the best time to initiate shorts is at the upper range of the bullish movement. And I think that's where Palo Alto is, PANW. And because of that, here's what I'm going to recommend. Cyber earnings, CYBR earnings, show that cybersecurity stocks may be showing some weakness because they kind of missed on their revenues, right? The bullish PANW stock chart pattern on both daily and weekly gives us an opportunity to short the top. If indeed this is the top, we think it may be. The way to play it would be wait until the end of the day instead of jumping in the morning. Or, better yet, this is what I'm planning on doing, wait until the next day and wait for a big pop. It's going to seem like it's going to the moon, and then let it stall out, okay? And then initiate your short position and hold it for a day or two, okay? As 2019, 2018, and 2017 chart behavior shows, it is safer to initiate short positions on day one post earnings, okay? That means day after earnings. Or conversely, this has worked sometimes, or at the market close on the earnings day release. So wait until the market close, wait for the top, and then short it into that, okay? Regardless, here's what I'm planning on doing. I think that there is a significant opportunity for those of you that are a little more seasoned, that can take a little bit more risk, is to short the pop day one post earnings, okay? Or you could do it day of the earnings, but wait until the market close. Okay, so if you have any questions about how to play this, or if you have any questions about what option strikes to choose, click the link below, schedule a 20-minute consultation with our senior traders. Okay, this has been Brandon, 13 Market Moves. Let's rock.